Muchísimas gracias. Bienvenidos al Fintech Meets Freight Tech, Redefining SMEs, Trade Finance. Quería traer a Emir que dé unos opening remarks. I don't know how to do this in Spanglish. I'm already starting in Spanglish, so I'll try to keep it in English all. Just two languages today, right? Emir, please. Thank you for hosting us. I'm Alice McLaughlin. I'm your host, or ceremony host. Really, our main host is Emir in his neck of the woods. So please, Emir.
Good afternoon, everyone. What a pleasure to have you all here at the Miami International Airport this afternoon to talk about logistics and finance, fintech, finance, logistics. This is going to be fascinating. We're going to have a great program. As your host, it gives me great pleasure to welcome you here, the director of the airport, our county mayor, the commission. It's a warm welcome from all of them to all of you. Thank you for being in Miami and sharing a little time with us. So what I'm going to do is I'm going to get into my presentation. My presentation talks a little bit about the airport and all the great things that are happening here. And I'll just wait till he gets it up. But first of all, I'd like to start off by thanking Ernesto and his group here in organizing this great event. This is the first time we've done something like this. This was his brainchild, and I have to congratulate him. I think this is a fascinating way to move forward by combining these two industries, right? I mean, people think about logistics, but they don't think about the financing. Or people think about the financing, but don't think about the logistics part. And it's really, they have to come together because that way we're going to be more successful as a community and globally, really, because this has applications all over the world. So thank you, Ernesto, for being the brainchild of all of this. And okay, here we have the presentation ready to go. So if, I think I need to go this way with the slides. Okay, so let me start basically with the big picture, right? So Miami International Airport is your leading airport in international freight. We have been for the last few years. We were again last year. We're number 2 in international passenger. We're the second international gateway for international passenger in the United States. We've had that title over the last couple of years as well. Obviously, we're the largest and best served gateway to Latin America and the Caribbean. It's a no-brainer for us. But the most exciting thing is that 52.3 million passengers last year. That was a record year for us. We are way on our way to making that a larger number this year. So we're looking at about 53 to 54 million. We're about 10% above last year already right now. So that number is going to increase over this year and the next. We don't see anything stopping us from continuing to grow. We are forecasted to be at around 70 million passengers by the year 2041. So well on our way, and I think ahead of that forecast if things keep going the way they're going. Focusing a little bit more on cargo, 2.76 million tons of cargo. That was a record year for us once again. And you can see there the trend line, how strong we've been growing over the last few years. I always say this in my presentations. The best thing to happen to us was COVID. The worst thing that happened to us was COVID. During the COVID period, cargo never stopped here. 50% of our cargo that we move here is, 80% of the cargo that moves here moves on freighters. The freighter operations continued while the passenger flights, many of them were grounded, not because they couldn't fly, but because we weren't allowed to fly to many of the destinations around the world. But cargo never stopped flying. Miami was a COVID distribution center for this region, and we're very happy that our cargo operations continued. 90% of Florida's air trade goes through Miami. 40% of Florida's total air and sea trade goes through Miami. So you can see the huge amount of trade that actually goes through this airport. We contribute over 275,000 jobs to this community. And today, 41% of our tonnage is in transit. We're not even capturing all of it that goes through here. We're only capturing the O&D. So it's actually a larger number, but the data is not available. So cargo, obviously, very important to this airport and will continue to be. So today we've got 96 airlines flying to Miami, of which 59 are passenger and 37 are cargo. We serve 175 passenger destinations around the world and 103 freighter destinations around the world. No other airport in the Americas even comes close to these numbers, just to get an idea. So 73 destinations in the United States. So a lot of us think, well, Miami has a lot of flights to Latin America, but we're also very strong in North America. 73 destinations is quite a bit. And when you look at the entire world, 102 international destinations all over the world, including parts of Africa now, Middle East, and obviously Canada and Latin America and the Caribbean. If we focus particularly on Latin America and the Caribbean, 79 nonstop passenger markets to the region, more than any other airport. And then over there on the other side, you can see that 82% of all imports and 76 of all U.S. exports to the region come through Miami International Airport. So a considerable contribution to the Latin American market and imports and exports within the region. So when we look at international trade a little bit closer, this graph kind of shows you the top 10 markets, both by weight and by value. You can see that by value, we hit $74.6 billion worth of O&D trade with the world, worth 1.3 million tons of cargo and volume. So quite a bit. This number is about 1% above last year, and we hope to continue that growth both in trade by weight and value. I'd like to also point out, you can also see that the top markets are the top markets in Latin America: Brazil in value, Colombia in weight, and then Chile, Colombia, and then they kind of changed a little bit with Ecuador. But those top 3 or 4 markets have been the same markets over the past 10 years. It continues to be dominated by Brazil and Colombia, mostly with Ecuador, Chile, and Peru being there. The other thing I'd like to point out very quickly is you can see that China has all of a sudden risen both on the weight and on the value side. So China continues to be a strong and growing market with us. A lot of that traffic is being driven by e-commerce. So that is something that is a little bit different than some of the statistics in the past. When you look at the types of commodities, most of the commodities that we are exporting are high value, high tech, computers and peripherals, we've got machinery, we've got auto parts and so forth. And then on the import side, it tends to be mostly perishables, which we are the kings of perishables. So today, 68% of all imports, perishable imports into the United States go through a Miami International Airport. So those flowers that are sitting on your table, I would bet 100% that they came through Miami International Airport. So you get the idea. A lot of perishables come through the airport, 55% of all seafood, 91% of flowers, and 68% of all vegetables and fruits. So we're basically feeding the United States when it comes to fresh food through our airport. This is the 5-year compound annual growth rate, 8% growth, very strong. It continues to be that. We had a very strong Valentine's Day, and we had a very strong Mother's Day recently in the flower import side. So the numbers are continuing to stay strong for us in the perishable market. Some initiatives that I want to share with you over the last few years. Probably have heard that we became a pharma hub. This is an IATA designation. It's a CIV. It's a Center for Excellence that you get a certification if you have a pharma community. Our pharma community is made up of 9 different members. You can see them listed there: American Airlines, Atlas, Amerijet, LATAM, et cetera, et cetera. This community and the airport last year handled 16,000 tons of cargo worth $5.56 billion. That is a huge amount of money in the pharma area. This is also a very strong area for us. It has been for several years now, and we expect the pharma growth and our community to continue to grow over the next few years. We're also a foreign trade zone. People say, well, what's the big deal about having a foreign trade zone on the airport? Well, we're one of few airports in the world that are a magnet site. The entire airport is actually a foreign trade zone. This is just another tool that we have to promote trade, to promote commerce through our airport. Last year, for the first time, we had our first operator, LATAM, open up their foreign trade zone. And the reason they opened up their foreign trade zone is because it lowers their costs. So all of the parts, all of the tires, all of the avionics, and everything that they need for their aircraft is now within a foreign trade zone. A lot of those parts are made in foreign countries. They come to the United States. They go into that foreign trade zone. They pay no duties. It just sits there. When they need it, they export it out to wherever they need that part or material. And then, if necessary, they will pay then duties at that time. Or if they re-export it to another foreign trade zone, they pay no duties. So it's a way to do business and to lower your cost, and it also gives you certain advantages by working in a foreign trade zone. So VIC is Vertical Integrated Cargo Community. This is our future cargo development project here at the airport. We've been negotiating with the developers that are working on VIC over the last 3 years. We expect those negotiations to end probably sometime this summer. That's when we've been told that they're going to be presenting to our commission. This is a private sector investment. This is not public sector. This is not the airport building. This is private sector. Nearly $2 billion in investment. If this goes through and when this goes through, this will be the largest investment in cargo in the Americas. It'll be the largest cargo project in the Americas. This is a vertical facility, the first time that we will go vertical in this country with a cargo facility. These types of facilities have been around in Asia and other parts of the world for some time, but in the United States, there's nothing like this. It'll be highly mechanized. It'll be highly automated. There's going to be a lot of tech behind this. Speaking of tech and logistics, this is where it comes together. So this facility will be state-of-the-art. It is also highly sustainable. So it's got all the components that we like to talk about, and I think will be a subject of some discussion later in today's presentation. But it also includes, for me, which is very important, is additional parking for aircraft, right? So the airport, we're low on cargo parking positions. This is going to up 10 new wide-body parking positions that'll have hydrogen fueling. That'll be the first for Miami International Airport. We're pretty proud of this project, and hopefully this gets all approved sometime this summer. So air service development, I wear a couple of hats here at the airport. One of them is air service development. I'm the guy that goes and talks with the airlines and says, hey, welcome to Miami. It's a great place. Come and do business with us. And that's me. We've been pretty successful over the last few years. In 22, we had ITA, Sky Airlines from Purdue, Alaska, Aer Lingus, French Bee, and Sky High Dominican. And in 23, we had Volaris, Norse, and Porter. And then this year, Level and Condor all start up over the last few years. What this means is a huge economic impact to our community and to our airport. International service obviously has a huge impact. We don't know exactly the amount of each one of these aircraft, but we do know that Miami International Airport has a $32 billion impact to Miami-Dade County. So just to get an idea, and a lot of that obviously comes from the airlines that serve this community and everything that they contribute and touch. Terminal projects, so $7 billion worth of investment. So why am I talking about the terminal? Because all of us use the terminal, right? We all go through this airport, and this airport is going to be transformed over the next few years. One of the first major projects that we're going to be looking at is the expansion of Concourse D. That's where American is at. So at the far end of D, you can see on the map here, we're going to take those gates that are now in the open air and make them contact gates. So basically you will be, just like any other part of the terminal, you will be inside with a jet bridge leading out to the aircraft. This is something that a lot of the regional operations of American don't have today. We got a lot of complaints from many of our passengers. Hey, I don't want to be out in the rain. I don't want to be out in the heat, et cetera, et cetera. This is going to make all of that go away, and that passenger experience is going to be a much more pleasant one for those passengers using those gates. We also have the South Terminal expansion. So this is going to be beyond the J Concourse. This will be Concourse K. Concourse K will have 6 gates. It'll be 3 domestic and 3 international to start. Eventually, all 6 will be international or domestic. We'll be able to switch back and forth. This is one of the major projects that we're going to have. It's estimated at almost $746 million. Quite a large project. This is an enabling project because with this concourse, we can move some of the operations from there, which are currently over at F. We're going to be building a new F. So the G concourse is going to go away. We have an F concourse that will replace the G and the F. This project, around $896 million, is one of the largest projects. It'll give us some additional gates and will also improve that customer experience. What this doesn't show is that all of our concourse in the future will be connected on the air side, so beyond the security. So today, sometimes if you want to go to a lounge and you're at F, you've got to go through security to go to that lounge at E. In the future, you'll be on the secure side, and you just can transfer over and go to that lounge at E if there's not a lounge at F, which we're working on actually getting one open there. So a lot of improvements. This is actually under construction today. We have a new parking lot that's being built. It'll add about 4,000 new spaces to the airport. It's going to be adjacent to the current parking lot that we have now. This project is a few years from finish, but it's going to enhance our ability to bring our customers onto the airport so they can park and improve that customer experience right here at the airport. Then we have a new hotel. So this hotel will stay in operation. We have a new hotel. It's a Winston property. This hotel is about, it says there, 2027 completion time. This is a new hotel in the sense of the word. Everything is new in it. It's going to have a lounge on the top floor, that rotunda area that you see there. It'll have 450 rooms. It'll have new conference facilities, new business centers, etc. It'll be a vast improvement over our current facility. This facility that we're in here today dates back to the 1960s, so you can get an idea. It's quite old. This is going to be one of two new hotels. So when we're finished building this one, we're going to build a second one. That hotel will be basically across the street from where we're at today, where that helipad that doesn't work right now. We're going to take that down, build a hotel on top of it. That's the location of the second hotel that we're going to be building. So quite a few new facilities that are being built here at the airport, with vast improvements in our infrastructure and our amenities at the airport. We are here to serve you and this community, and if you have any questions for me, I will be here, or I can answer some now. I don't know what the agenda calls for. But.
Yes, the agenda started with you, but it continues with a couple other chats, and then we'll have like a fire chat panel with questions and open to all also for more.
Thank you.
Yes. So technically, I should have introduced him first, but somehow I got confused in how the order of affairs is. Shall we introduce each person, or you want to go ahead and talk your panel? Okay. Amir introduced himself very well. He holds an incredible title. He says it very light, but in reality, his experience goes to many decades in the aviation industry as a director of marketing and air service development for Miami-Dade Aviation Department. His job, I don't know how he does it. I will need like 3 people to do it because he does from the marketing to the negotiations to everything, make it work. And also interface with people and media. A little bit of all. Now we have our organizer, Ernesto Villa, Tech Cargo co-founder, pioneer in tech, AI, and other initiatives with over 25 years of experience in the field of tech cargo, AP trade finance, as the factor, DeFi protocols. In other words, he's defying the traditional logistics world. He's a bilocator, as many new techies, between Europe and the Americas, and has an interesting, I have been interviewing them, without them knowing I'm interviewing them. So I could read here, but not really. He has an interesting take, and I think this is the reason why it brings you all here, is how we can innovate in something that is absolutely necessary with total new paradigms, like DAOs that he has, led, and other technical matters. We're going to follow with Raul Diego Regidor, which is Tech BCN, CTO and co-founder. All these folks have too many years of experiences. Do you really want me to name all the years of experiences you have? Well, Raul, you have over 15. Only? I think your wisdom shows for itself. He has led many platforms in technology, directs CRMs, ERPs, BPMs, and so forth. Very complex frameworks of IT projects, and is expert in the customs world. How he does it? Complexity. You'll hear more in a bit. Martin Gaviria, CV Credit, Senior Finance vice president. Over $1.5 billion in LATAM. Kudos. That's really impressive. You serve as Senior Vice President of CV Credit, and during the last 18 years of experience in domestic and international trade finance. Nowadays, he really focuses in the LATAM, Mexico, and US regions. Other words, the Americas. Cesar Silvia, Iron Horse Credit, VP Business Development. Cesar is the Vice President of Business Development of Iron Horse Credit, an inventory finance company. Over 9 years in asset-backed lending, introducing inventory accounts receivables, international trade, purchase order, and supply chain finance. Many roles in BBA Finance and other institutions. I think people want to discover you more because your knowledge this is just the tip of the iceberg. Hector Hernandez, Hector. Why am I saying it in Spanglish? Come on. Dex Freight, CSO and co-founder. Hector is an experienced entrepreneur with a vast interest in blockchain technology, transportation, logistics, and software development. Again, another couple tenures under his belt. He has really defined things and is a firm believer of Web3, which is very interesting to see how he envisions Web3 within this environment. It's not very common, so I myself, technologist at heart, want to hear him. So welcome to this very interesting group of folks with mix of experiences somehow are interacting together. Now, we have a couple more chats, correct? You want to come ahead and say yours? Ernesto, you're next, correct? You want to come over? He has few words. And thank you again for organizing all of this. And let's hear his point of view and vision on what you're working on. I think that's what you're at.
Correct. Well, thank you all for coming. Especially with the traffic. I know some of you left yesterday to be here today, so thank you for that. And also, there is a lot of fintech events happening today. At least 3 that I know of. So the fact that you're here today means a lot. So thank you for that. I was not supposed to be presenting today, to be quite honest. I'm filling in for our friends from Exim Bank that also had conflicts on their agenda, and I apologize for that. So with that being said, I will apologize if I stumble through my presentation because I had a little time to prepare. So before I start, I'd like to have a show of hands to see who is here from the logistics sector, just to see who's who. There you go. How about who is here from the financial sector? All right. It seems to me that everybody else is for the free drinks. So good mix. For those that don't know me, my name is Ernesto Vila, co-founder of Tech Cargo. As the name says, is a cargo company, logistic company, that also has developed a tech stack and a risk assessment protocol to manage trade finance. And some of you might say, well, trade finance is not the business of the logistics providers. But I'll tell you what, you are absolutely right. It's not. However, the two industries has a lot of common points, a lot of touch points. And we believe there is a lot of opportunities if those two work together in the form of collaboration, integration, and we believe the key is in technology. So we believe all these could work together and make it better. You see, in trade finance, there's a lot of frauds and what keeps everybody awake. However, a lot of those frauds and losses could have been prevented by an experienced logistics provider if it was working with a funder as their principal party. Today, when we refer to trade finance, we're thinking of documentary trade finance, where the funders pay very little attention to the physical underlying goods and the movement of them internationally. And that really opens the door to a lot of risk, to the point that some funders simply do not participate. They don't touch it. They cannot mitigate that risk, and they don't touch it. And the problem is that SMEs and middle market companies struggle to find liquidity to fund their supply chains. So I believe there's an opportunity there. Some of the challenges, of course, like I said before, documentary trade finance focus on the financial risk, and those are some of the conditions. The company has to have a financial health, that they're able to insure the ultimate debtor, that they are able to file a UCC, and in the case of trade finance, that there is a copy of a bill of lading, and that's a way of indicating that the trade has started. It's no longer an intention, but it has commenced, and the goods are no longer at the facilities of the manufacturer. However, this represents a problem for the buyers. A lot of manufacturers do require a payment before the goods move out of their facility. So there is a mismatch between requirements from manufacturers and funders, and that's a deal breaker. It contributes to the deficit there in lending. However, there are some sellers that are happy to accept a large deposit, 30 to 50% deposit. They control the logistics, they ship the goods out, and they produce a bill of lading. And so that's when funders come in, and they're happy to participate in there. However, if in that transaction there is a little mistake, a typo on the bill of lading, on the description, they got to go back to the manufacturer who contracted the logistics to make a change. And guess what? That manufacturer also has the ability to change the consignee, the destination. They can ship it somewhere else. So the sheer fact that funders are happy with the bill of lading really doesn't eliminate that risk. And I think this is nonsense, but anyway, we'll go through it. So this conflict of payment terms between buyers, sellers, and funders, it creates a huge challenge to all the stakeholders, but at the same time, a big opportunity, particularly to funders that recognize that there could be a better way, that the SME lending criteria is pretty high, and that could be lowered through a partnership with a logistic provider that could foster this change. So big opportunity for the two industries to work together. And logistic companies today do work on trade finance indirectly. All the cargo that is moved around is shipped one way or another by a logistic provider. So the logistic provider really works with their principal party. They give them instructions to move the goods from point A to point B, and so they do that. They don't pay attention to the quality of the goods, the quantity, whether the color is right or dimensions. They don't care. They follow the instruction of their principal party, which in most cases is the cheaper. And this opens, once again, risk for the funders. There is a very famous case of a shipment of copper ingots. About 12 containers, $12 million from China to Singapore on their letter of credit. Shipment went out, letter of credit presented, collected. A couple of weeks later, when they were about to use the material, they discovered it was rocks. Beautiful painted rocks in copper color. Fraud. It's very scary, if that doesn't scare you, I don't know what keeps you awake at night, but scary. This is a very scary business. So anyway, so we believe on the documentary trade finance as we know it today, the funders put a lot of emphasis on the financial risk, and they do a very good job mitigating that risk, including all the contracts that govern the transactions. However, those contracts, what they really represent is a transfer of goods from manufacturer to buyer and funds back to the seller. And we know who manages the funds and who executes the transfer of the funds, are the funders. Now the goods are managed and transferred by the logistic provider. So that's what I'm talking about, that these two industries, they need to be together closer. And that's why the name of this event, Fintech meets Freight Tech, because there is a huge opportunity to be grasped here. So freight forwarders have the potential to mitigate their risk. This is a resource that is largely misplaced. Let's face it, they are by definition experts in cross-border. They know the regulations and rules in their country, how to make entry. They have the relationships with all the actors in the supply chain, from, terminals, port operators, carriers, trucking companies, customs broker, you name it. They have those relationships. They can turn that know-how, the boots on the ground, because logistics is a very labor intense. They're used to it, and they can work for you, the funders. That's the reality. And guess what? Not only they have relationships with the actors on the supply chain, but they do have clients, lots of them. Lots of clients. And the relationship between a freight forwarder and their client is almost like the relationship with a barber, right? They sit in there and tell them what had dinner last night, right? Forwarders have the inside of their business. We know who they're buying from, how much they're paying, who they're selling to, how much they're selling, whether they're getting paid slow or not, or sometimes they ask us to hold a bit of lading, so to force a payment to them. So this relationship is very strong. And one thing is that the freight forwarders are the cheapest form of capital for the shippers. They ask for credits, extended terms for no money. So here's where interests align. Forwarders like to collect sooner. So the freight forwarders could become an ambassadors to the funders, originate deals, and participate on at least the very minimum, collecting their fees sooner. And this is the bigger opportunity. These are numbers pre-COVID. Today, probably bigger. There is 1.5 trillion, this is a whopping number, man, 1.5 trillion of unmet demand for trade finance, mostly on the hands of SMEs and mid-market. This is a problem for growth globally. And we at Tech Cargo, we are aimed to tip into that. We won't resolve it all, but we are going to participate in that. And I'd like to invite you all to participate on this. This is a very big opportunity. But this requires a transformation from all the stakeholders, where funders need to recognize that they could work with a logistics provider as their risk mitigator. The logistic company need to be educated, trained, and understanding financial risk, and become an asset manager for the funders. And for the shippers to see the logistic providers not only as a service provider, but rather as a business enabler, a partner. Because if a logistic provider is able to work with a funder and design logistic strategy that allows them to tap into new liquidity, the stakes are different. And that's what it could be done. It's not impossible. We've done it. Just to put a little bit of color, we had a client, long-time client, a company that is a mid-market company, turnover a couple of millions, profitable on the consumer goods, global brands, but we call it an occasional client. Occasional because, like every other savvy shipper, they shop around for price, and the beat us in the head for $50. So the only value that we were adding them was pricing. If our price was good, they would ship with us. Otherwise, they have a better option. However, recently they landed a very big contract, multi-million-dollar contract that they couldn't fund out of their own balance sheet. They went to their supplier, a global brand, said, don't care. You pay and carry type of thing. So they couldn't have a bit of lading as required by the traditional funder. So it was a deal breaker. They learned what we were doing because we've been, doing this for a while and talking about it for a while. They learned about it, reached out, the conversation was, let me see what my little forwarder can do for me because I'm desperate for this deal. So the stakes were high. Funny enough, we were able to put a facility for them with a partner financier that knows our processes, manage the cargo from the door of the manufacturer. They paid, delivered to the consignee, obtain a proof of delivery, They raise their invoice, fund their purchase the receivable again, flip the facility into an insurable event. Everybody happy. Client happy, funder happy, we're happier. Now this client that was an occasional client now is a regular client, to the point that he brings us to their negotiation table so we can design a proper strategy so he can fund those transactions. So what I'm trying to get to this is like logistics and finance could do a lot better working together. And that's why I have brought together all of you from all the different forms of shape of the industry, because there is a lot of conversations to be had. You know? Anyway, so this transformation, it is not too complex. We have gone out of our way to make it simpler for all the stakeholders. We have developed the technology to do it. So if you're a logistic company and would like to be trained into risk mitigation and want to be part of our network, make sure to reach out. If you're an SME looking to create a facility for pre-shipment finance, also reach out to us. We make sure to put you together with one of our funder partners. And most important, if you're a funder, we would like to be your partner, not only to refer deals to you from our network members, but also the most important is to become your asset manager. Work with you together to put strategies so you can participate on SME lending, which is an untapped market on PO financing. This is a huge opportunity that a lot of people don't participate on it just because they're unable to mitigate their risk. And we, the logistics providers here, can help you do that. So thank you very much. Looking forward to doing more with you. Cheers.
Now we have Raul. Raul, would you like to chat a little bit more about your CTO happenings in this industry?
Of course.
What are you working on? What are you disrupting? Are you creating and distracting at the same time?
Exactly.
Go for it.
Okay. So thank you, everybody. I'm going to try to unmount this. I don't know if. Okay. Cool. Well, again, thank you, everybody. Of the three worlds that Ernesto has presented, I represent the technical one. And I know that most of the times technical guys are a little bit boring, so we have made a special effort in order to make this presentation not so boring, in order to try to avoid you to get falling asleep. So let's go for it. I'm really excited today to speak about business agility in this Fintech meets Freight Tech event by the hands of Tech Cargo. And why is that? Why is that I'm so excited about talking about this topic today? Because what I'm about to present you the next 10 minutes, more or less, is a real pain point that most of you are suffering in your businesses right now. No matter if you are entrepreneurs or you are company directors or you are employees, no matter. Because the paradigm, the problem is exactly the same for everyone. So let me explain a little bit what I'm saying. This is you, this represents you when you start your business, okay? No big deal. Everything is not so complicated because you know your stuff and there is no problem at this stage. But as long as your business is growing, you start to have more dependencies and more information going back and forth between all the parts involved in your business. Obviously, you need to control this communication, this information which is going back and forth between clients, between suppliers, between departments, whatever. So your first approach probably would be to go to the market and select a software that suits you. For example, an ERP, a CRM, or BBM, or something which is fitting in this business model that you have in mind. So that's great. But what happens if your business starts to grow? What happens if you rock your business and you start having more clients and more suppliers and more departments? obviously, the more your business grows, the more complex is your business, the more complex is all the connection, all the information that is going back and forth between departments, between clients, between systems, whatever. So as you can see, the original software that you had selected or you have implemented for a very specific set of requirements is not able to manage all this mess of information. And even if you are able to tweak it a little bit, even if you are able to adapt it in order to, to get more boundaries, make it bigger, and control more about this mess, this system will not be never able to handle all this information. Okay? Fortunately, this is something that Tech Cargo leaders knew from the beginning. So they make a plan in order to avoid this problem to become a situation right from the beginning. So today, I'm here to explain you how did we help them with this approach. Okay? But before that, let me introduce myself. Alice has introduced me a little bit, but let me introduce me again. My name is Raul Diego. I'm the Chief Technology Officer of TechVCN. TechVCN is a software development company based in Barcelona. We were born like 10 years ago, a little bit more. And we are specialized in providing custom-made solutions for our clients. So someone could be wondering why Tech Cargo needs a particular software for them, why they need a custom-made software. Let's check it a little bit. Let's review all the process that Ernesto has explained just 5 minutes ago. First of all, Tech Cargo is assessing the opportunity of all the operations that the system is controlling. After that, they are making the assessment of the risk associated with those operations. And once the risk and the opportunity are identified, after that, they are evaluating the supplier in order to ensure what Ernesto told us, that they are meeting the quality and the quantity requirements. After that, and this is a very key point, they are managing the arrangement, the funding arrangement to financially support those operations. And finally, they are managing the logistics behind all this process. This is obviously not an easy process. So what we did? What we did is develop an online platform for Tech Cargo to cover all this process from the very beginning to the end. So coming back to our previous scenario, instead of trying to fit all this mess of information and all these connections and information going back and forth into a very specific software, instead of trying to adapt the business to a software, we have made just the opposite, just to adapt the software to cover every one of these flows and ensure that nothing is outside this scope. And this is the Cargo Online Platform. So let me review, or let me show you a little bit what the Cargo Online Platform is about. The Cargo, as told you, the Cargo Online Platform is a custom-made solution which is 100% cloud. This means that we are taking benefit of all cloud potential in order to process all the information in the most reliable and scalable way. In fact, this scalability is something, this scalability with the adaptability that the cloud technology is providing to us is something key for systems like Tech Cargo. Why? Because from a technological perspective, you cannot know at the long term where the business is going to be, or at least the direction that the business is going to have in the long term. Maybe if you're lucky, in the short term, you can predict more or less where the business is going. But in the long term, most probably, you won't. So the adaptability of the system becomes key in some systems like Tech Cargo. With the current setup and with the current resources assigned to the cargo online platform, we are able to manage more than 100,000 users at the same time, which from the current scenario is pretty good, or is more than enough. But again, as we are using cloud technologies, we could scale it easily and could serve even more users if it's required, and really easily because we are using cloud technologies. And from a technological perspective, we are using the latest technologies in the market available, which are Microsoft Azure and .NET in the back and React in the front, and not just the technology itself. Because we are using agile methodologies, we are able to provide to Tech Cargo new features, new complex features in a very short period of time, which is giving this adaptability and this flexibility that the cargo needs in order to grow and to be continuously evolving, as Ernesto was explaining. So this is what the cargo is doing today. So let's see what the cargo is going to do in the next future. What are the next releases of the cargo online platform? What it's going to cover? Essentially, in our information workflow that we saw, the cargo leaders have identified that we have 3 platforms that we need to communicate. So at some point, we will make it the integration with these 3 platforms. One of them is ShipGo. ShipGo, it's a platform that allows you to track the cargo in real time. So you know where in the supply chain is the cargo and where and when in real time. So this is an integration that is going to be really, really soon. After that, we are going to integrate with CargoX. CargoX is the first platform which is using blockchain technology in order to ensure that documents and titles are shared in the most secure and in a secure way, in order to let people to really check that this transfer has been made effectively. And the Factor, which is an initiative regarding finance, which is going to be as well integrated with the Cargo solution in the short term. So integrating these systems with Cargo will take to the Cargo online platform to another level and will allow us to align the technology with the roadmap that the cargo leaders have in mind. And this leads to the end of my presentation. So thank you very much. And if you have any question, thanks.
Thank you so much. It's really impressive. How do you develop, and I'm starting with the questions already. This is my personal one, right? We're disruptors, we can't help it, technologists, right? So you will explain to us and to all, how do you make flexible technology? Instead of fitting in the box, make the circle expand, right?
Okay, I think that nowadays we have enough tools in order to do what I just explained. The key of this, from our experience, the key of having the software aligned with the business is not trying to adapt the business to a specific software, but just the opposite. Take the software and adapt it to the business processes. This is essentially the key. And today, nowadays, we have more than enough tools to make this happen in really agile mode and in a very easy mode.
So let's start with the questions. Since we moved the chairs and now we started like from here to there. So let's come. All of our panelists are introduced parties. And I'm just going to ask questions. Some are more direct to one of you. Some are more open. Martin, what is supply chains finance and what is not? Can you demystify? Let's check. Yes?
So, hi everyone. First of all, Ernesto, thank you so much for inviting us here. Very interesting about how can we mix trade finance with logistics, with tech, with inventory lenders. My name is Martin Gaviria. I'm the partner and senior vice president of Civic Credit Inc. But our DVA these days is Exodus Global. Why? We merged in 2020 with Exodus Capital, which is one of the largest commercial finance companies in Mexico, so we decided to rebrand the company. We do trade finance. In this 20 years, we have deployed more than $3.5 billion, 50% to the US market, the other 50% to SMEs in Latin America, in different countries. Going to your question, what is supply chain finance? There's only a couple of lenders here in this room. I think in the finance community, if you ask what is supply chain finance, everybody will come with a different answer. Because why? There's many ways of doing supply chain finance these days. The only common thing between the ways of doing supply chain finance is that it's a buyer-oriented program, meaning that the buyer of goods is setting up a facility, a credit facility. It can be with a platform that they already have lenders in place, or it can be with a bank or lender that they have their own platform. And the whole idea of this is to pay suppliers, period. But paying suppliers, it can be for the benefit of the supplier, or it can be for the benefit of the buyer. Going back to the history of supply chain finance, it's not that long. That started in the 80s, 90s. The way it started, big banks, the CIT, the Citibank, the Bank of America, the Wells Fargo, they wanted to deploy more capital to the S&P 500, to corporate companies, and these guys were not using those monies, right? So they say, okay, I'm seeing that you guys are buying on terms from suppliers, domestic and international. You guys request 30, 60, 90-day terms to pay your vendors. You are moving billions of dollars per year. You maintain a lot of money in accounts payables, right? I know that you don't need the money, but maybe let's try to present something where I can deploy capital for the benefit of your vendors so they can monetize those receivables. And the interesting, in the 80s, 90s, they launched this with a lot of technology. All the supply chain finance lenders, they are powered by technology. It's the only way it could work. So basically, when they set up these programs, they allow the suppliers to bill their customers, and if they needed the early payment, they requested the early payment through the platform, and they were able to monetize the receivables. At the end of the day, the benefit for the buyer was that the bank was giving them a percentage of the interest rate that they were charging, or they were stretching the payment, extending the payment. So this became very, very popular with big corporations like Levi's, like Walmart, Amazon has it, Dollar Tree, Dollar General. And our company as a factoring company, for example, we were financing suppliers. We were buying those receivables of these companies that they were selling to multinational companies. And all of a sudden, the clients told us, hey, my client now is offering me an early payment, and the cost of capital, the interest rate, it's 4% per annum compared to our rate that was way, way, way beyond that. So that was that's how this all started. So when we started seeing that banks were doing this for large cap companies, we said there has to be a way that we can implement this for middle market entities. And we started as a factor. Factoring, it's a lender that basically it's providing account receivable financing, is buying receivables to companies that they sell on terms being 30, 60, 90 days. So what we do is we improve the cash flow. So when we saw that this was launching, we decided let's try to put something in place for middle market, but not for the benefit of the supplier. Let's try to benefit the buyer of the goods. So what we do, for example, at Civic Credit Exodus Global is we set up lines of credit for buyers. What we do is we pay the suppliers at maturity of their invoice, or once they invoice for the goods, and we extend the payment terms. That is off balance sheet debt. At the end of the day, we are financing that trade between supplier and buyer. Typically, we put credit insurance in the middle. For the buyer, the interesting thing is that instead of paying cash against documents or having a short term of credit with that supplier, we give them the flexibility to have a very long period of time to pay us back.
That's fascinating. Thank you so much, Martin.
Sure.
Cesar, now to you. What challenges do SMEs and mid-market businesses face that inventory financing specifically addresses? And how does this support their growth in their trajectory?
Yeah, so again, Cesar Silva with Cesar Silva with Iron Horse Credit. Little background on the company. Iron Horse is one of 3 companies within the group. Right now we have a little over 200 million of assets under management. As it relates to Iron Horse in particular, we are a non-bank direct lender. And similar, of course, to Civic Credit, we are working with companies that, quote unquote, cannot go to a traditional bank, or maybe a bank is not a good fit for companies. As we know, always, cash is king. And as we all know, sometimes banks will provide capital to companies that probably don't need it, right? Or they can show that they don't need it. So that actually created a good market or a niche for us to actually go into, which is, let's focus on companies, more in the lower middle end or lower middle market, where companies actually need capital to continue to grow. Not only continue to grow, but maybe also if they're going through a certain situation where they need additional working capital, that's where we come in. So at Iron Horse, what we actually found since inception, actually back in 2018, we found a niche where we actually look for companies that have to carry inventory, which of course most companies do, especially being here in Miami. A lot of companies need to provide a certain product, not so much a service. But Iron Horse, we focus on companies that carry inventory. And what we do is we provide a revolving line of credit where we actually use the inventory as collateral. So companies, as we mentioned, coming out of COVID or during COVID, as most of the people can attest to, a lot of companies, of course, because of the low supply, they needed to pay for product in advance. A lot of vendors were not really providing terms. Well, even companies that actually were able to buy product, now you have a lot of capital tied up on that inventory. And if you have to buy inventory and continue to sell, but not at the rate that you want to, a lot of capital is really tied up, especially with you having to pay cash on delivery or even prepayment. And then when you sell to somebody, you actually have terms. So of course, there's a cash flow gap from that perspective. So at Iron Horse, what we do is we look at the inventory, provide a revolving line of credit, and help the companies actually generate more cash to be able to buy much more inventory. Now, we leverage inventory here in the US, also in Canada, but another piece which actually is a lot of synergy with, of course, Tech Cargo and us in the group, is the ability to also lend against inventory in transit, which of course has its own complications and of course a lot of opportunity, but goes back to the same thing, is we're helping the companies that own the inventory be able to free up the cash to actually continue to grow the business.
Great, thank you so much. Moving to Ernesto. Could you delve into how your services in asset management and risk mitigation specialize or specifically enhanced the safety and reliability of SCF and inventory finance?
Okay, well, in the case of SCF, supply chain finance, new term. In the case of supply chain finance, in terms of risk mitigation, well, we do a lot of things. We validate the provenance of the goods early on. We have boots in the ground to, touch it, see it, feel it, carry it. Most important, we are the ones issuing the bill of ladings. So logistics providers are the ones issuing the bill of ladings. So when we work on behalf of funder, we understand that's our principal party, and that's the key of everything. We respond to the interests of our principal party, and that's how we mitigate the risk as opposed to a regular logistics operation.
Now, to any and all of you, pick, go first, take a stab. Who typically seeks out your services, and what are the key unique needs do they have when they come to you? Is it traditional, untraditional? How do you tackle where normally is someone else unable to do?
Yeah, I can start. So I was saying, so early on again, kind of talked about like banks and their traditional, a little more, especially now tying up their credit and having much more requirements for a company to qualify. Companies that we're looking at, again, is companies that are not bankable, and that can be because, one, not so much of a startup, but companies that might have gone through a certain seasonality, maybe losing money a couple months or a couple quarters at a time, where they don't fit the parameter. Or the other situation is where you have companies that are hyper growth stage, meaning they're growing maybe more than the traditional bank has the appetite to cover or continue to finance. So the companies that we're looking at are companies that are looking for additional liquidity where banks are not going to be a good option, or companies, of course, that are on that growth trajectory where they're looking to partner with somebody that can actually grow with them. Of course, us being more of a boutique direct lenders, we have the ability to grow with them. We can do line increases within a week or so compared to a traditional bank where, of course, it's going to be much onerous process in order to qualify.
Anybody else?
Go ahead. No, in my case, I'm Hector Hernandez. I've been working in the logistics industry for like 20 years, but my focus is on bringing forward new technology. We're talking about DAOs and blockchain technology and smart contracts. So for the most part, it's us teaching the customer something that they don't know about. So they're not coming actively looking for. They were when Bitcoin was very high years ago, and then they dissipated. But in reality, the experience that we have is very relevant to what they are doing, because basically, it's a problem of trust, right? The reason all those big guys didn't want to finance transactions is because it's really difficult to trust that they're going to get paid back, right? Assessing that risk, and it's also the amount of SMEs that they will have to reach to kind of get the same result that they get with a big player, it makes it not worth it for them. So we started working on technology, blockchain technology and smart contracts, to start creating from the transaction reputation systems that are transparent, everybody can access them. So in the future, when somebody with traditional finance or on new finance can look at somebody to lend some money, for example, they don't have to. They don't have that issue anymore. So it speeds the flow of money, the flow of funds, and it also
And it makes me jump to the next question, which you're about to go there, which is how blockchain in the space.
Yeah.
How traditional finance? Why the SEF? The invoicing. Explain to most people what really is blockchain succinctly, and what is blockchain in this space. I'm certified in Princeton University, so you talk to me, I understand everything.
Perfect.
But now, let's talk to everyone who's in the
Simple terms.
business every day.
An example that everybody can relate to. Imagine we have an spreadsheet, an Excel spreadsheet. Everybody has a copy, right? And if I add something into the spreadsheet, everybody will know what is being added to the Excel spreadsheet, but I cannot do it arbitrarily. So there's something that needs to happen to validate that happened. Now, once it's in the spreadsheet, I cannot delete it. So it's an immutable book of record that anybody can see. It could be for the purpose of tracking who pays who in the case of Bitcoin, or it could be provenance of an invoice or provenance of the goods, right? So it's basically a distributed ledger where you have all the records, whatever you want to record there, but once it's there, it's going to be forever. For instance, in trucking, which is where we started with this journey, you have, in the US is a $700 billion industry just in trucking, right? And then you have 700 freight brokers, intermediaries. Why do you have so many? Because people don't trust the trucking company. It's very fragmented, right? How many trucking companies do you need to touch from the cargo to move all the goods that you move for your customers? So every 3 transactions, you end up finding a new trucking company that you don't know or trust. There's no transparent reputation system universal that everybody trusts. And if he deals with somebody and he has his own records, he don't want to share them with me because I might be a competitor in the future. So this fragmentation is a huge problem. But then what this technology, distributed ledger technology, allows is for the exchange of this information in a record that nobody can alter. So now I no longer need to trust the trucking company. I need to trust the record. So if there's a trust record, okay, with Third Cargo, this guy did 100,000 transactions in the last 10 years, or 100 transactions, and 98% of them got delivered on time, then I don't have to trust the guy. I can immediately go ahead, just like you trust FICO scores or something like that, right?
Is base your decisions on data.
Correct.
And real facts.
Correct.
And provenance, for who doesn't understand what provenance is the origin or the ethnicity of something. Okay, so just wanted to clarify that. I know it's a term that we use very loosely,
Yes.
but sometimes in the normal day-to-day operations it's not commonly used.
Yeah, so just to round up the idea on this, we're going back to who are the customers looking for us, or for instance, I'm going to make an example. Freight forwarders, they use, or freight brokers. Like I own a freight broker for the last 15 years. We all use transportation management software. So you have a whole bunch of them. Let's say 100 of them are out there. This transport, like you mentioned, who mentioned you mentioned the complexity of all these other systems, right? So imagine every trucking company having a different TMS, or every freight broker having a different TMS, keeping the connectivity with all of these different systems to be able to communicate tracking or payment information, all these things. So what blockchain technology allows to do is, if we all get together in a cooperative style network where the code is not mine, it's not yours, it's something that we all use to share. Think about public utility, right? It's very similar to that. You connect to something that we can all use and benefit from, and we can go on with our life and have our own business models built on top of this technology that we share. So far, with the advent of APIs in the last decade, we've been, this is amazing. But if you want to connect 100 systems, are you going to develop the API and maintain it with each individual operator in the network? It's impossible. So the protocols, when you think about a protocol that is based in blockchain technology, the principle of immutability applies. So we don't need to trust each other. We need to trust that what we put in there, we're never going to change. So nobody's going to be able to change unless we all reach consensus again to modify it. It means that now you have a neutrality that's very important if people are to collaborate, because nobody can take advantage of nobody. So when I look at new customers that you were mentioning before, is talking to a TMS and saying, hey, there's a new business model. If you share your data, instead of having 10 APIs with all your different providers, just use a protocol. It's one instead of 10. And now we have to do the sale on that functionality. So it's not them coming, this is a very disruptive technology. So we have to teach them so they can understand new business models. So it's quite a challenge.
And I can only imagine when you're dealing with languages and time zones, right?
Yes.
Just a little factor. Now, Ernesto, as an asset manager, what unique assurances do you provide to funders that differentiate yourself from other traditional logistics providers? What makes you different? What makes you you?
Well, as a logistics provider, of course. Well, logistics providers, for the most part, are only focused on completing a delivery from point A to point B, fast, efficient, and securely. That's the main focus. As an asset manager or risk mitigator for a funder, we take a very holistic look at the entire operation. We look at the regulation, for example. On a single import, there could be 3 different regulators that have an impact on it. We look at, once again, at the provenance. We do inspections to validate the products are as per the specification of the contract. So as a freight forwarder, we go deep into the contract that makes, we want to find out what makes an irrevocable delivery, for example. We look at all the details and the terms of the fine letters, which normally a freight forwarder doesn't do. So that's what makes a difference. We really go deep into the due diligence in behalf of our funders. And I keep pointing at you because you're one of them.
Now, Cesar, give us the Cesar. Thank you so much. This is very interesting because you go into the details where some others don't, basically, right? Now, Cesar, why you? Why a middle market will go to you? Why choose to implement an inventory finance facility?
Yeah, as I mentioned earlier, a lot of these companies, of course, have to carry inventory, and a lot of them, especially in our retail, the way that the whole market is shifting, they have to carry much more inventory. A lot of retailers, for example, they need to carry X amount of weeks of supply before they can actually become a vendor to a particular company. So all the different companies, of course, go back to the same issue, which is, well, I have to carry inventory. Well, I have to pay for this, right? And at the end of the day, well, you want to take even longer to be able to sell the product, but again, you have to carry much more. So what we actually help these companies is the ability, once again, to be able to buy inventory and also free up cash, so for them to actually continue to expand. Because the one position, of course, as a company, as a growing company, not even growing company, as a regular company, if you don't have the inventory, it's easy to go and get substituted for somebody else, right? So having the ability to be able to leverage an asset you already have in your balance sheet to be able to generate more capital is definitely crucial.
Great. Hector, how would you, well, we went through the blockchain, so I think we could move into from the who's and the risks, right? Who wants to take the appointment on logistics and why this is appointed to you? Cesar, for example, let's start with you. How would your presence of logistics provider appoint you, okay, to manage inventory? And this management affect the risk profile. What is the new risk profile and hence the approval rate of these inventory finance applications?
Well, yes, I think as a boutique shop, a non-bank, I mean, again, we're not a cash flow lender, we're more collateralized lender. So of course, having full visibility into actual collateral is crucial, right? As much as we want to, I don't think we can 100% eliminate any type of fraud, right? We can always try to mitigate as much as we can. Having full visibility. Now, of course, us being that we're lending against inventory, having the presence and having the ability to actually track in real time how much inventory goes in and out. Again, inventory is constantly turning as it should be. If it's not, then it's a whole different set of problems. But for us, having the visibility to be able to have the different systems in place is critical for us. Now, of course, we work with the company. We do have people in different cycles, analysis, underwriting that actually takes place that helps us with the process. But at the end of the day, it's always at a point in time. Now, my example earlier, when we actually leverage and lend against inventory in transit, inventory goods coming in, of course, as we know, UCC doesn't apply to, of course, the maritime law. So having somebody like Ernesto and the team, they actually have people in the ground, we're able to go and actually see exactly what we're financing. Because at the end of the day, if something were to happen, we always have to fall back on that collateral. And to your example about the fraud, right? If we don't want to get into a situation where the music stops, we have to take over the inventory and all of a sudden realize that it's a whole bunch of rocks painted a certain color, right? Which we can go into horror stories later on, but bottom line is having the ability to actually hire somebody to be the conduit from point A to point B and actually help us through the whole process. And it's easy for us if something were to happen, because as us, we're really hands-on. We provide a whole, not only lending from a lending perspective, but we also provide different services to the company to help them optimize their inventory, which is a win-win for the company. Of course, for us, helps us run, at least what we try to do is run a good operation for the company for them to continue to grow. And if something were to happen, it's easy to pick up the phone and just call Ernesto and say, well, listen, this is happening, this is our inventory. What can we do and actually be able to get out of a situation rather than having to react maybe a little bit too late and of course taking on the loss. So having that visibility and that partnership, that synergy between our groups is definitely helps us with mitigating risk.
And continue on that risk, Martin. Tell us why partnering and the importance of who has the real time control of the goods mitigate the risk.
Yes, sure. So, as I mentioned, we are a trade finance lender. We finance exporters and we finance exporters all across the Americas. So Ernesto came to us, it was 2-3 years ago, with a very, very interesting idea. I've been doing this for 18 years. And there's a lot of ways of financing supply chain, opening LCs, partnering up with a PO lender, but typically that PO lender is going to open a letter of credit so the factory in Asia or Latin America can draw the funds and then start the production. So while we are all terrified, it's about pre-shipment financing. Send them prepayments to the supplier of your client. Why? I don't control that company. So if my client, the borrower, the importer in the United States, say, hey, and typically in China, payment terms is typically 30% down payment, 70% cash against documents, or once the goods are in the water. Normally, we like to finance the second leg, the 70%. Why? Because we know the goods are in the water. There's a consignee of the record who is our client. Eventually, they will receive those goods. They will sell them. They create an account receivable. Somebody else will buy the receivable, or we will factor the receivable, or we'll collect from the end debtor of those goods. So Ernesto came to us and said, hey, I think I'm disrupting the industry, and I found a way of doing PO finance, not putting a lien on the borrower, taking control of the cargo and controlling inspection of the goods where the foreign factory is located. So I say, well, it's your money, let's give it a shot, right? Let's see how that goes. So we started introducing clients to Ernesto. In fact, we have a common client here, Rene, thank you. And basically, the way this works is we were doing account receivable financing, once again factoring. We were financing the receivables of a company in the States that was manufacturing in China. An example, one client of those was selling to Walmart. When Walmart issued the PO, we sent the PO to Ernesto. We signed an intercreditor agreement where we agreed that once those goods arrive to the United States and are become an account receivable, from our factoring advance, we're going to pay Ernesto. So he was covered by us, not by the borrower, not by the importer. So Ernesto, since Freight for Water, you guys have operations worldwide. You guys have feet on the ground. So you guys are capable to sending people to the factory in Ningbo, which I don't even know where it is, but I hear that name every time I find something with China. Ningbo, everybody's in Ningbo. So they do send somebody there, and they start. First of all, they pre-assess the capacity of the factory, so they don't know if it's a scam. They know it's a real factory. They have been in business for X amount of years. They have the capacity to really perform that order. And Ernesto then gets into an agreement with the factory. Hey, I'm gonna pay you on behalf of the importer in the United States, right? But I'm gonna control you. You have to give me feedback of what's going on with your order. So when they start manufacturing, I guess feedback is provided to Tech Cargo. And then once the goods are ready, they don't use a third-party logistic company or another Freight for Water. Tech Cargo, his own company, he takes control of the goods. And those goods are shipped to the United States. And he make final delivery to the end buyer, which in this case was Walmart. So he controls the delivery from the factory to the account debtor. Once I know that the account debtor received those goods and Walmart is gonna take 30, 60, 90 days to pay, at that moment I purchase the receivable and I pay Ernesto. So the borrower, which is typically a very weak company, they never control the goods. So we are basically financing the whole transaction. We do require some skin on the game. And that went very well. Like all the clients that we send and that we finance through this model with Ernesto's money, the idea is now that we put our own capital in this program. We didn't have any issues. And before knowing Ernesto, like honestly, we have lost a lot of money doing pre-shipment finance. And I told Ernesto in 2019, we did a write-off for $4 million because we send money to factories in China and those Chinese exporters, they never fulfill. And good luck trying to sue a company in China. You need to have a lawsuit in the United States. You need to have a judgment and then transfer it to Ningbo to see if a Ningbo judge is going to be able to recover your collateral. And my collateral was the money I sent for goods that belong to an importer, but that importer filed for bankruptcy and the trustee went nuts. Like, who owns this money? So yeah, we are in a very complicated world. Lending money, it's not easy. It's extremely risky. We try to rely these days a lot in technology. I think later on this topic, we'll talk more about fintech and technology and platforms that are available in the market these days to mitigate a lot of risks. So yeah.
Yeah, let's move. Let's wrap the risk part, the scary part, moving into the cool part, which is the innovation, the disruption. So I'm going to dovetail these questions between you, Ernesto, and you, Hector. Okay, so these are kind of use cases or real life challenges that you have faced fraud prevention, and you have come successfully, and give us a non-successful, because everyone talks about success, right? And everyone wants to hear in your CV, your resume, I achieve all this, but the paradigm has changed that failure has been the biggest achievement on success and pivots. So give me that, and on the blockchain side too.
Okay, I've got plenty to talk there.
Well, I'll keep you at one example. I asked for one.
Yeah,
huh?
we've been able to rescue cargo at the very last minute that was going to be taken from the port on the basis of a fake bit of lading. Okay, and that, my friends, happens every day. The same time we're here, the good guys, thinking how we do our job better, there are the bad guys thinking how to steal from us. And guess what? They have the resources to do it. So it's a scary world all there. Pick your partners correctly. That's what I'll say.
Yeah, so I have a lot of stories too, but more related on the logistics
But
side.
this is
But
why
there's
you got
something-
into that.
It's something because there's some other people here in on the logistics side, and there's a problem. So we all heard about identity theft, right? And usually when you talk about that, is somebody buying an expensive TV with a credit card. That's why you know. But in reality, in freight, and this has been happening very much so in the last 2 years. You have a lot of companies that go to what we call lowboard. So basically, if you're a traditional trucking company and you want to find a freight that you want to get, you go to Truck Stop or DAT or one of these entities to find whoever advertised loads, and then you go in. But now you're seeing all the information from the person that is advertising it, right? So they steal the identity of a trucking company, bid on it cheaply. Of course, somebody did, this is a very good offer in the trucking company, sends all the documents. Now I have all the documents, and now I go in and pretend to be the other guy and go in and hire the trucking company. So the horror story that happened is that we had a deal on the freight brokering side, the freight company, and our dispatchers didn't notice, and they hired a company, and they gave, I don't know, 100. I'm talking about 4 months ago, like four, I don't know, over $100,000 of shipments to this guy within 30 days. And they were not the company. They were going, the shipment was being delivered, right? Somebody will go pick it up. You think it's this company, but they basically are double brokering and with no intention of paying the carrier. But the law in the US makes it so you need to pay the carrier needs to be paid at some point in the future. So of course the company disappeared, but for the financiers, because there was a bank in the middle financing that company also, and everybody lost, right? The trucking company never got paid, and we ended up we already paid the bank. Thank God we were paying the bank, and now we talk to them, and the bank pay us back. But it was a horror story, and this is very small. This is widespread in the trucking industry. So the solution to this type of problem goes back to identity and reputation. And when you have immutable, because you were just asking the blockchain angle to it, if you have an immutable reputation system or an immutable identity that you can verify, nobody needs to tell you, he's the guy. If he already transacted with 100 of you, each one of you is vouching for him already. So it makes it a lot easier to transact with these smaller trucking companies, so you don't have that problem in the future. Now, in regards to the payment, one of the things that we developed and patented, and this is good for you, we're going to have a conversation afterwards on this, is that the transaction starts for them basically at the end when there's an invoice, right? But what we can do is actually, on the moment the agreement between, let's say, a freight broker and a trucking company happens, remember he said, I'm very much afraid of financing somebody in China or before the transaction happens. This is solved by the technology. So when let's say a freight broker hires a trucking company, you already have the identity and the reputation playing in. The trucking company signs a piece of paper. In reality, they also sign something that is called a smart contract agreement on the blockchain. So basically, if I deliver, you pay me. And it's a system that will trigger that payment automatically. So now you can, from that moment on, you have a digital transaction that can be used as collateral, right? If it's a $2,000 or $5,000 shipment, I'm talking about not the value of the goods now. I'm talking about the value of the transaction. So that transaction is not even in transit yet, but there's an agreement, there's an identity, there's a reputation. Guess what? Now you can automatically assess risk and fund the transaction. You don't need a whole complex underwriting process. You have all the requirements. So now you can use all the machine learning algorithms and all the technology that they've been developed to fund the transaction right away. Guess what? The trucking company delivers. There's no like, the lady that do account payable this vacation this week, no, the software will trigger the payment goes in, everybody's happy.
So he's talking a little bit about smart contracts.
Yeah.
Right. So you want to say what is a smart contracts, and we dovetail into the technology trend?
Sure.
Just try to be very
sure. It's a horrible name because it's just a piece of software. But a good way to think about it is it's a set of rules that cannot be changed. We both agree on the rules. We sign on it, right? And they're not going to be changed. All the rules, if this happened, then this. For instance, if my flight get delayed, I'll get my money back. right? I don't need to call nobody. The system already knows it. There's a feed that tells them from Miami International Airport, flight got delayed, my wallet, the money hit my wallet.
You know,
There's
we're
no underwriting,
recording
no
this.
claim,
Amir is
nothing.
hearing you.
Yeah.
Yes.
I'll help you with
That's
that.
right, he's here. You know?
I'll help you with that.
Okay.
Actually, that got invented by a guy that advised our team. His name is Rina. Big shout out to the guy because he's a genius guy. And they implemented in one of the big blockchains in Mexico conventions. It was 100% success. All the claims got paid automatically. But the problem is the regulation behind it of how you use digital assets. So in the US, you need what we call, it's another complex term, tokens. I don't want to get into it, but the problem is the US is lacking on regulation, very much so. So a lot of the big entrepreneurs are leaving the country. In my space, I'm not talking about machine learning, I'm talking about specifically blockchain technology, because in reality, this threatens the status quo or the traditional financing system, which is a very powerful industry, and you're seeing that pushback, right? So the only thing that they cannot do is take your Bitcoin away. But right now, anything that smells like tokens, SEC is going after it, FTC, CFTC is going after it, so it's a big problem. So this thing is working in other jurisdictions. It would be really cool to do some pilot on that pilot type of thing, so we don't have that problem. But as soon as you touch a consumer, then we have a problem. So that's a problem.
And that really perfectly moves us into trends, technology, cool stuff, right? Because as complicated as regulation are, and yes, there are other jurisdictions like Malta, very advanced, and so forth, Europe itself, because they're cognizant of how this is going to go. So either pro, against, just add on to the new things.
It's a shame that it doesn't happen here in the US, because a lot of the brightest minds are here. The capital is looking for this bright, and then they ended up, both of them, going out to fund the deal outside, and we're losing the jobs, we're losing the knowledge, but it is what it is.
But talking about a little bit on the innovation side, Martin, fintech-wise, playing pivotal role, what are the trends? What is it that you see next few years happening? And what are you trying? Like right now, I'm playing with synthetic AI myself when I don't sleep, which people think I don't sleep ever, you know? But tell me, like, what do you see the new trends are?
Yes, so basically, this is funny because we are a fintech lender, but I don't consider myself a fintech lender. We have to become a fintech lender in the past. So all these guys that come from tech and they start lending money, many of them end up burning themselves. Why? Because they make it so easy, so fast, so unsecured, that at the end of the day, if you make it easier for the borrower, that's gonna bite your back eventually. So we use a lot of technology to underwrite our loans. We don't wanna be those lenders approving loans in 24 hours. That's not us. If somebody's looking for speed, or try to get as much as possible, as soon as possible, it's not us. Like, we really like to take our time. For us, gut feeling is absolutely everything. Meeting the borrowers, seeing the principals, seeing them face to face. Thanks to Zoom these days, I don't have to travel anymore to Latin America, but at the end of the day, that helps you a lot. But unfortunately, we need to become a fintech lender. Like, this is pushing us so fast, and now with AI, we need to come up with a solution. We're already working on that. There's, for example, in the factoring world, as you said, there's lack of regulation, lack of legal framework. That, just so you guys know, electronic billing, facturación electrónica, it's a reality. In the United States, you can send an invoice in a napkin if you want to, by mail. It's legal. In Chile, in Mexico, in Peru, and Colombia, there's no longer physical invoice. Everything is electronically, right? And there's a legal framework. So for factoring companies, it's amazing because suppliers upload their receivables, and for the state, it will be magnificent for the IRS because they can see how much they're billing. They try to avoid that cash market that they cannot tax. So these legal frameworks, they allow lenders to participate in this world. It allows them to have more visibility of the trade, more visibility of how much a company is really selling. Now what they put in a P&L that you don't know if it's true or it's not. They just send you a spreadsheet, right? So what we do these days is use a lot of platforms, and since our business is primarily international, we have platforms that allow us to know the imports and exports from companies in the States or all over the world. In the last 10 years, we can see to which market they're selling. We can see the volume of containers. Identity theft, we have a software that basically matches that ID of that person with their social security, so it let us know if there's a match, if it's different, something's going on. We have a platform that connects us to the banks, so the borrower, they don't need to send us bank statements. We just get this connection to that software and just download all the bank history. And if we're gonna finance trade, we never jump into the first transaction between my client and their client, or between my client and the supplier. I'll always tell them, go play around, then come back and show me what you guys have done. If it's good, I'll finance it. If not, then no. Jumping into the first transaction is extremely risky. So if we have bank statements and they're telling us, hey, you know what, I've been selling to this guy for 5 years. Okay, cool. Don't send me a bank statement that you can forge. Let me have an API connection to your bank. Let me download everything and let me see those deposits, right? Also with the banks, we can prevent MCA loans or I don't want to say we are being recorded, but there's these lenders.
And stream live.
Yeah, so in the financial system, any lender put what is called a blanket lien. Cesar is very familiar, same here. So even if I'm only financing a receivable, all assets of the borrower are part of my collateral, but there's many other guys that they just don't care. They just take a junior position and they bleed your client out. They just withdraw the money, and if your client is running out of money, then they won't be able to continue performing, right? What other technology we use that is cool? We have a platform that connects us to their accounting system. So for example, if they use QuickBook Online, they don't need to send us their financial statements. We just use this platform, we get connected, we can see their balance sheet as of 2023, their interim 2022 and everything. So there's a lot of technology that gives us certainty that the data is true. And what AI is disrupting and is changing is that now we will need in the future people underwriters reviewing that data. AI is going to do it for you. So you will be able to connect all these platforms working together, connecting with Dun & Bradstreet, connected with Allianz, which is the credit insurance company that we use, getting all that data, putting it in the cloud, and then AI analyzing that and making a credit assessment. But what I don't want to take away is the gut feeling of meeting the client, knowing who they are. And I want them to know that it's going to be difficult for them to get approved at the end of the day, that there's people thinking behind, and because the main risk is if you put it very, very easy for a borrower, they'll find a way. And that's what we have seen in the past.
And well said, as the new technology, how this got integrated in cloud. So AMLs, anti-money laundering, KYC, know your customer, KYB, know your business, origin of source of wealth or source of funds, identity, signature, day of birth, all those verifications, right? Now, they used to take a long time, right? You will go to your lawyer or your accountant and they'll perform it 2 weeks later, there's checks. Now, AI does it in minutes. It's one of the things we do in one of my companies, Sync Data. And it's very interesting to see how this could play into, the next step for bankers like yours or lenders like yours. And moving on to Caesar and these trends and what you see in value, not only in these new trends, but in the technology. Accuracy and timely data. Way of inventories. What is of importance to you and how you see technology interfacing, or do you have technologies that you're looking at? You have clients using those and you see the difference?
Well, let's start with this, right? So because we're, once again, collateralized lenders and the inventory that we're lending against is constantly changing, right? It's constantly moving. Having the ability to have any type of system API integration where, yes, we do rely on the company to give us reporting every single week, depending on the frequency of the borrowing. A little bit different, of course, than the factoring or the AR lending altogether. For us, it's more of a revolving, so it's constantly going up and down. Having real-time data is crucial. we have looked and we have different programs that we use for different alerts and different underwriting processes. But what we all agree here is in terms of our underwriter, we don't want to, again, underwrite a deal that's going to fund in 24 hours. That's not us, right? It's for us to actually go look at the inventory, count the inventory, and also back check and reference all the different information that would actually give you much more visibility into the inventory. And by that I mean, well, if you're buying inventory and you have, of course, your lender costs, you want to make sure the company's actually accounting for that the added value, the lender costs of the product correctly, right? We have situations before where a company doesn't have, of course, all the systems in place. Next thing you know, once you actually do a roll forward or inventory reconciliation with the actual documents, you see that they were overstating the inventory by $500,000, right? Well, we're lending against that $500,000, so that, of course, create an issue. So yes, technology, we always trying to implement. Again, we have different systems we're tagged into, and different APIs to give us real-time data into their accounting, into their banking system. Of course, if there are an e-commerce company, for example, integrate and actually give us real-time data in Shopify, for example, or the Seller Central and Amazon. And of course, that's the data that we actually look to be able to make decisions, right? But we never want to lose that human touch and that gut feeling, as you mentioned, because it's different when you actually go and sit down with the client. And again, I mean, I think all of us can actually say that we know a certain business, but nobody knows the business more than the actual owners and the business owners, right? The people running the actual show. So having that conversation, looking at them, and actually looking at the inventory that you actually are lending against is critical, and I don't think that will go away. The flip side of that, of course, is, as you mentioned too, is timing, right? For example, yeah, we do have other higher lending possibilities out there that we don't like to kind of all work together. But again, companies in desperate times actually take different actions, right? So that's certain things that we are able to actually flag or catch right before it happens. Another example, taxes, right? Everybody has to pay taxes, a lot of taxes. So what happens is if all of a sudden you have a lien or there's a non-payment of a certain tax, for example, an employment tax, right? Well, the IRS can actually come and prime any secure lender. So having the ability to actually have a system that tells you the company's record when they actually pay or when they don't pay, and of course us having the ability to react is crucial for us. Otherwise, you can be left kind of just taking a back seat in a case where somebody else will collect in front of you, right? So yes, technology is important. Right now, we were talking about it today. I mean, it's like drinking from a fire hydrant, right? It's a lot of information out there, a lot of things that you can actually implement. But having that human touch and the ability to kind of bring it back to the basics is definitely crucial for us.
Great. And wrapping up, Ernesto, integrating logistics with purchase orders finance. What innovations tickle you? Like, what's there?
Well, I've done it all: blockchain, IoTs, and AI. So IoTs are very important. Once again, in the eyes of risk mitigation, right? IoTs give you real-time data. Geopositioning, speed, impacts, humidity, a whole set of data. This data also could be plugged into blockchain, and upon arrival, a container at the port, it could trigger a smart contract for a payment. So that's a lot of stuff in there. However, the one I'm more excited about, and at the same time more scared about, is AI. AI is amazing and it's scary. But I'm hopeful so we know that it's growing fast. It will take a lot of repetitive work away, but I also know that it's going to open new opportunities for things that we cannot even imagine today. But in the case of my business, today is serving a very good purpose.
And I agree with you. I want to demystify something. You may see in my name, Sync Data AI. Yes, is an AI company. We create jobs. People feel, and we were talking, succinctly, this fear about technology, like when the car happened. Mr. Ford created a car that it was commercialized. What happened with the fellows that were with the horses? They had to transform their jobs. And this is what's happening with technology today.
That's
For
a
every
good,
job that people tell me is going to disappear, I create 5.
that's a good question that I wanted to ask them, because if there is a reputation system, right, and you already know who's providing the service, even though it might be a very small company. You were mentioning about $1.5 trillion of illiquid assets on trade finance, right? On the transactions. You have $1.5 trillion of Bitcoin and 2.4 in whole crypto. And those are, not liquid assets. But if I have my Bitcoin, I don't want to sell it, and I want to produce money out of it. Now there are protocols that make that money liquid, right? So now you can use it, and it's very cheap because they can do 7% a year and be very happy because they didn't sell the Bitcoin. They just made 10% of it. So you have this massive amount of capital that is not servicing any purposes for the real world. There's people that speculated mostly, and now you have these protocols that put it to the service of the guys that need it to be lending us money, and then you add the blockchain and the machine learning to underwrite automatically in seconds. How do you guys see this? Because that's a disruption. So the question I have for you is, with this framework, how do you see the future of your organizations when this can be done in seconds? You mentioned gut feeling. I get you. I have a freight brokerage, and everything that moves on that area is gut feeling. This has nothing to do with it. It's a reputation. Is there or not? The money's there. Put it there. Make the profit and pay the transaction. So in that future, which is happening today, right? Not on a global scale yet, but it's happening. What are you guys thinking about? How are you gonna, on the finance world? What is the next step for you?
We need to evolve. That's what I'm seeing. We need to evolve, and we need to do it fast. Fortunately, from our side, I think many of the companies that we finance in Latin America, here in the States, they're still they're SMEs. They're not that sophisticated. I think that change is gonna be way faster in bigger companies than trading companies. Okay. What we are trying to see is what's gonna be our fit. How are we gonna play with AI? What are gonna be what are gonna be the opportunities for us in that market? If you ask me, as of today, we'll continue doing everything as we have done it before. But I know that if we don't adapt, we won't survive. Because in 30 years, all the decision makers are gonna be living in that world. They're not gonna live in our world, and those guys are gonna expect results with one button. I applied for my loan. I want it to be approved in 24 hours. If you cannot do it, I already have all these other guys.
Now.
Yeah, now. Yeah.
And this is the beauty where I explain to people the demystification of AI. We create jobs, 1. 2, the human then uses the super capacity they have that no machine could really do, which is experience, criteria. It gives you a lot of trends. It gives you a lot of suggestions. I'm sure all of you have tried ChatGPT doing something, even just to find a restaurant. And what the heck is ChatGPT, right? Now we're one of you told me they don't use Google anymore. They use ChatGPT to Google. Oh, that's true. So this is what's going to happen. We're going to integrate more and more. And I also want to open the QA for the audience.
I just want to finish with something.
Sure.
I think it's going to be way more challenging to people that they do consumer loans, what is B2C, giving credit cards, approving something for individuals, but what it's B2B, and at the end of the day, it's a line of credit, and it's an important amount. Like Cesar, a company, and my company, we don't do $10,000 loans. Our minimum is $100K. We go up to $20 million. So all these borrowers that request us money, I don't see very sure that somebody's approving $5 million with a click. There's that infrastructure doesn't exist today. Of course, it exists for Halliburton. If they knock the door of Citibank, hey, can I have $5 million? Yeah, sure, immediately. But in the SME world, I think we are still a little bit far away from that. I know it's gonna change, and we need to adapt. We're gonna see. We need to stay competitive.
Great. And opening the QA, I want to do something different that most QAs don't do. I want the person to state your name, what do you do, your question, and the reason why. So it's a little bit of networking QA.
Yes, thank you. My name is Francisco Becerra with Corner Finance. We're capital acquisition brokers. So we sit between companies and funding sources in helping companies find the right match of capital. And the question is actually for Ernesto. Ernesto, are you buying are you becoming the owner of the merchandise in the foreign country?
No. So title is a bundle of multiple rights. So we're taking the right of custody and disposition, while the clients retain the right of commercialize it. So unless we're settled, they cannot exercise that right.
Right. And so
it doesn't come into my balance sheet. That's what I'm trying to say.
Okay. So the other question is, it sounds great because I don't have to be in China to figure out who I'm dealing with, or if they really even exist, because you do. But that means that you have to have presence in a lot of places if you want to scale. And then, but the real question is the cost, because now we're dealing in transactions that margins are very thin. We have financial transactions, with that shipping transactions, et cetera, et cetera. How much do you add to the transaction by having this great and necessary service?
Well, very good question, by the way. So at the end of the day, those goods are moving from China to whatever are being hired, through a logistic company. So they have a logistic cost regardless. I've been in occasions where the client said, well, you're $300 more expensive than Panalpina. I said, fine. Go to Panalpina asking for $1 million, right? So if the money is a deal breaker, $300 in the scheme of things is a drop in the bucket. So really, the friction really is not on the cost, but rather on the access to the capital.
Thank you.
Your name?
My name is Ivan Castro. I'm with Scrummers. We are a fintech and Web3 innovation lab here in Miami. We basically enable companies to refine ideas, turn that into business models, and business models into products that they can bring out to the market. The question that I have for you guys is, I see you guys speaking in technological terms and about solutions and stuff on one side for the fintech and on one side for the logistics, and I think the idea here is to close that gap where fintech meets freight, right? What would you say are the biggest roadblocks or obstacles right now in the market that allow you to do that? Like you were explaining that you could underwrite loans quickly with the information that you have on blockchain. But what would you say right now are the biggest block roads for that to happen so that we can close that gap and actually allow fintech to meet freight or vice versa?
Yeah, so on the stuff that I'm working on in the US is regulation, right? The technology is there. He was mentioning how difficult it is to underwrite a $5 million loan. If I send to a DeFi protocol right now $5 million, I get a loan in 1 second. So it's difficult with real goods, right? Which is the challenge they are all solving. That's the second challenge I was going to mention. So if regulation wasn't an issue, then the second issue is you can put whatever you want on the blockchain, right? So the information will stay there forever. But if what we call garbage in, garbage out, right? So you mentioned an IoT device, right? IoT, you know where it is. The merchant that you put it in the blockchain, you're not going to be able to delete it. But if the IoT was faking the movement of the goods, you have fake information, right? So that is a challenge that is not quite solved yet, right? How to make, in my case, how we solve it for transportation is because there is a digital transaction that happens. So we are not bringing a real consumer good into the blockchain. What we're doing is we're allowing these two parties that are transacting through a protocol, putting that in smart contract, and then create a digital asset, a token that represents a future invoice, right? Because there's no invoice yet. They didn't provide the delivery, the document. So that digital asset doesn't require nothing from the real world, right? You need reputation, you have the agreement, you have documents to back it up. Now I can finance the transaction, and that is really powerful. Just to give you an idea, one of the things that we work on is payment streaming. So if a trucking company arrives to pick up the goods, and the guy starts driving, every mile he drives, he gets $2. on the wallet. So they don't need to call nobody. They don't need to send an invoice. Nothing. It just hit the wallet as they are going. The guy stopped, the money stopped flowing. So the technology is quite there. The framework in the US is way behind. And then on there, the problem they're working on is a bigger problem in terms of when you use the collateral, it's a real good. Then you need Ernesto, right? Because somebody needs to have possession of the merchandise, right? And do all the good stuff they do. But for me, a challenge here is literally regulation in the U.S.
So you wouldn't say that adoption and trusting all this infrastructure?
You know, that's a very good question. We thought about that in the beginning. We spent, I need to be shout out for the team here and Emir, because they've been supporting our crazy ideas for over 5 years now, right? So
because I'm saying it because he was saying Martin was saying that for SMEs they're not there yet. Like, he see it more happening at the higher tier of the industry.
Mm-hmm.
Would you say that's also a problem? Because we see it on the solutions that we develop, and we solution fintech and blockchain solutions for many industries. And
we finance transactions in trucking for $1,000 rate confirmation sheet or bill of lading here in the U.S. over 5 years ago. So that's, the size of the transaction is not relevant as long as there is a capital provider that's willing to fund it and assume the risk and get the payment, the yield on their capital. So I don't think that's money will flow when the opportunity is, right? So the technology is there to de-risk all of these transactions. We already bridged that gap. We're financing transactions in trucking every day, right? On traditional factoring, with traditional factoring means, and there's a lot of freight factoring companies, digital-based transactions, which is a new thing. It just accelerates the process. What is really new is that now you don't need to be a bank to fund the transaction. If you have some money sitting around, now you can send it to a smart contract, and you don't need to do something else. You will get the yield back. A liquidity provider. Just making money from your Bitcoin, right? This is what is really disruptive. So I don't think that you need to go evangelize and teach people on how to use the technology. That's a waste of time. You teach them how to make money. Because at the end of the day, the plane flies. You don't know how it flies, right? You know it flies, it takes you there. That's all you need to know. And we wasted a lot of time evangelizing and teaching about blockchain, and we don't do that no more. The TMSs we talk to, and we are also B2B, and we are protocol. We only talk to technology companies. We don't sell to the end user. We just tell, good example, TMS company. You have 100 customers with $700 billion of freight every month. It's a crazy number, right? So, okay, why don't you, for every transaction they book, you make some money? Oh, how do I do that? Just add this button here, so when they click they do a transaction, they can finance and get paid right away. That's all. So I'm teaching them how to make money. I didn't mention smart contract or blockchain anywhere. If they are techie, like some of them are, then we're going through the rabbit hole.
And I know some of you would like to mingle and network, but I wanted to give the opportunity to anybody else to ask more questions. You? Okay, sorry. I'll move to you.
Yeah, great conversation. So you've raised a lot of really interesting points, and I can see, I've heard some of you speak years ago during a different era of Miami Tech. But now that the new thing is AI, I'm wondering how you would update your previous tech stack to incorporate that, specifically with the geospatial IoT, the DAOs, and the smart contracts. And just to give you a hypothetical, with the Baltimore Bridge collapse, and then before that, all the long waiting times for the shipments during COVID, all those ships out in port in Long Beach, things like that, just waiting to get in. There was a concept, I think, that you guys are putting that, of making all these goods to be very flow-like a stream of payments, for example, or a stream of goods. So it's supposed to be non-fungible individual shipments, right? So how does AI give you that that almost like that God mode of a video game to look down to actually optimize your flows of goods and payments that you didn't have 5 years ago?
Well, I wish I have that answer. Not there yet.
Well, just pretend all the technology is there.
Yeah.
Like what would it actually enable
if
that you didn't have 5 years ago?
Yeah, if I had a wish list, I would probably have AI risk assessed. Do the ingestion of the balance sheets, P&Ls, all the data flow, takes it in, do an assessment. Hypothetically, it could approve or deny a transaction. In good order, shipments or containers should be already incorporating an IoT. So cargo is already in there, moving crossways. The IoT will send a notification to a port facility that it has arrived. That will trigger a smart contract. AI could be many things. AI could be someone sending an email for an arrival notice. It could be picking up the phone and sending you a message to, collect money. It could even arrange for a truck to pick up the container. So AI could be many things. AI is all of us way more efficient.
Yeah.
No.
What I would like to add is for traditional lenders, for the financial system, banks, non-banking financial institutions to really take AI stuff, blockchain as collateral. If the legal framework is not there, it's going to be very hard for us, almost impossible to pledge an asset that it really doesn't exist in the cloud. So every time we lend money, we always want to know what's our collateral. If there's no collateral, what's the purpose of lending money? It's going to be cowboy lending. It's going to be way too risky, right? So I think this is a very, very big industry, and there's going to be a lot of black roads for this to progress fast. But in other countries, it's booming, and even the governments are supporting it. So it's going to be very interesting what Congress has to say about this. And I don't want to jump into 100%. Politics, but politics, I think, is not allowing some specific industries to grow as fast as we are seeing in, like, India, for example. It's crazy what they're doing there.
And going back to the example on the machine learning, again, machine learning is good. All these AI works based on the amount of data it has, right? The advantage of all these electric cars are coming to market, right? But they're going to have a hard time catching up with Tesla because they've been gathering all the data for many, many years. They have all these cameras in every single car. And when the other guys woke up, they don't have the data. So for autonomous vehicles, the other ones are way behind. So you have now a blockchain consortium called Mobi, which is, Volkswagen, Ford Motors Company, a bunch of these different manufacturers trying to pull the data together to be able to get close to Tesla, right? So data is the big thing. So with that in mind, if now you have one book of record that shows you transparently the reputation of every single trucking company, for example, and now you have a protocol that combines capacity and loads, which is what we did in Deck very early on. So basically, everybody here that has a shipment that we pick up is in one database that we can all see, and now all the trucks can see all the loads. Why do you need a broker? Because you already have the reputation, all the loads see all the trucks. That's why you have so many empty miles driven by the trucking companies. They drive by all the loads. They don't know about them because they are in different brokers or different freight forwarders handling the cargo. So it's a very suboptimal system, the one we have. But once they see each other, now you have AI. So you call robo dispatch. But in reality, you say, I have a load. In 2 seconds, you will get the load booked with a trucking company. The best reputation, the more suitable for that particular shipment. That will take all the job from freight, at least I'm talking about freight, from brokers in the logistics industry in the US. But guess who's next? Freight forwarders, and it keeps going. So it's very scary. I'm not that scared on the jobs that are going to be lost because I agree with you. From this will come a whole new opportunity that we don't even think about now, and that needs our creativity. That's one thing I don't have now, right? Is creativity. So I'm not that scared of that. I'm more scared of not being careful on how this thing evolve and eventually, do stuff, nefarious stuff. I don't know if you've seen tests, but they are already hiring humans. Remember, now you have Bitcoin to pay each other, so they're machines. So now, when you have the CAPTCHA, you see, you need to prove that you're human. You know what they did? They went online, one AI went online and hired a human and pretending to be another human for them to do the CAPTCHA, and he defeated the CAPTCHA. So that is very dangerous, right? Because, you know, everything is going by computers. Airports are, the grid, you know, nuclear weapons. So that's what scares me the most, not so much on the jobs.
You want to go ahead?
Yes, thank you so much. You all touched on some very interesting point, particularly in my industry. My name is Stanley Jonathas. I'm the founder and CEO of All Networks. We're a software development company. We primarily, specialize in SMEs, in manufacturing, inventory focus, and manufacturing companies throughout the Caribbean in countries like Haiti, Jamaica, Trinidad, Grenada, Barbados. We have an office here in Miami and in Haiti as well. We help companies that don't have any systems that are working manually with QuickBooks and Excel sheets. So I found it interesting, particularly with you, Martin, and you, Cesar. You mentioned the correlation between sometimes lack of financing for SMEs, because you don't have that information to corroborate the money they're asking for. Like you touched upon the example of Halliburton, calling Citigroup, they're getting that funding, that $5 million, that $1 billion funding, because they have systems, right? They have, not only they're might be a public company, but at the same time they have systems. You can trace their purchasing, their inventory, their manufacturing, their sales, right? Everything is tied to their accounting, their P&L, so you can see all that. So so I found it very interesting when I see that a lot in my industry, right? Because we get calls from a lot of companies where they started with QuickBooks, they started with running their business on Excel sheet, and we all know these systems, you can manipulate them, right? So the bank, when you ask for a loan, the bank or the financing company is going to be very hard to trust some of the information that's on there. But when so that's why we work with a lot of small and medium companies to implement ERP systems for them, so they can automate a lot of their business process, from talking to their vendors, managing their vendors, receiving the goods, entering the goods into inventory, putting barcoding system. So if you can, comment that a little bit, because that is very interesting. There's a lot of small, business that are getting into manufacturing that are very inventory focused. And as you mentioned, sometimes when you get a big order, you have to buy a lot of inventory. You have to buy a lot of raw materials to do that manufacturing based on the sales order. And not only you have to manufacture for that sales order, but you have to manufacture for your inventory as well. So that can be a challenge for a lot of companies that want to grow, get the financing, and still be relevant, because everything is changing with AI, as you mentioned, with technology. So it's very interesting. If you could touch upon that point a little bit more. Thank you.
Yeah, I think you hit it right on the head, right? It's of course, the biggest struggle from a small company, maybe a startup, is just that, right? It's really starting out from the ground up. And a lot of companies don't have, the capabilities to, again, go to a bank and fit those parameters. And for us, and I will highlight this one point, as inventory lenders, we started loans at 1 million. Now we're still working with companies that are generating, let me say, start between 5 to 6, 7 million annualized sales. But the critical point, maybe a little bit different from us, we do require an ERP system for the company to integrate between all the different channels. Listen, data is crucial for us, right? Because we're able to verify any information in real-time data. Now, correct. So, for example, we use an API for, as I mentioned before, to connect to a bank statements, right? So we do get the physical, not the physical, but we do get the copies of them, before we did, right? And can begin to tell you how many, not only us, but different folks that we talk in the industry, where they will give you altered information, right? Where you can actually now go back and actually verify real-time data or even go back into the API and actually log into the company system. So having the ERP system is critical. Now, if the company that we're looking at that has inventory is not able to actually have or they don't have an ERP system, unfortunately, they're a little too young for us. What we do is, it's great to have a conversation, is we do actually point them to the right people to can actually help them develop that program, right? Because, well, one, it's a win-win again, right? Because you're building that relationship, but we always, even if we cannot finance the company ourselves, we always trying to be a solution for them in the different things that they actually need to get there, right? We're not trying to be a long-term solution for the client. For us, we're trying to be more of a bridge gap financing, right? Between, let's say, exit a bank or staying with us for 1-2 years, get back on their feet and go back to a bank. A client shouldn't stay with us for more than 2-3 years. It doesn't make sense. So having the ability to help them get there. So yeah, ERP system, having different points in their business to be able to get there, I think is pretty crucial, right? So without it, unfortunately, we can't do it.
Thank you so much to everyone. We have a wonderful, thank you so much, Amir, again, for hosting us here, Ernesto for organizing these. We have a lovely cocktail hour that we can pass through. It's ready, waiting for us. And I have been told it has a beautiful terrace, so it will be my first time at this wonderful place. And let's mingle, make some business.
Let's
out
go
of
mingle.
this.
Thank you.
Thank you.
Thank you all.
Thank you very
Thanks.
much.